Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We gotta add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since we went out. The government has been getting bigger. Hey guys, what's going on? Jebb here, and welcome back to Coffee and Crypto Live. I do apologize for running a few minutes late today. We are running into some technical difficulties getting the stream live today. Today we're going to be talking about quite a lot of news, guys. There's a lot going on in the Bitcoin and cryptocurrency markets right now that we want to cover specifically. As you guys know already, there was a drop that happened yesterday as opposed to a rally that we should have been expecting following the CME futures coming out and giving us the data that we were expecting. We expected a 50 basis point rate hike, and that is exactly what we got. We saw a 50 basis point rate hike. Many people, including myself, were hoping that we would manage to see a rally come into play on Bitcoin, but unfortunately, that is not what occurred. Instead, Bitcoin dropped and is currently trading around $17,500 and change. And we're going to take a look at what that means for the future of Bitcoin here in just a minute. Give me 1 second. I'm still trying to fix something that was an issue before we got live. Let me see if I can get this going, and we're going to have a good stream. 1 second. Really apologize, guys. We've both been sick. Sarah and I have been sick over the last few weeks, and we've been running into some trouble because of that. Anyway, let's go ahead and jump out here and read some green names. Really, as I said, appreciate all of you guys tuning in. As I said in the title, the rally that we were expecting on Bitcoin was a bit of a flop, and we really were hoping for a lot more than what we saw. Oh my, it is oh my. Good morning, fam. Let's get it. Hashtag FinSolve. Love it. Love to see it. Really appreciate you for tuning in, my friend. We've also got Grand Roofing Incorporated saying good morning, everybody. Good morning, Grand Roofing. Really appreciate you for tuning in, my friend. Let me just go ahead and grab something really quickly here that I'm going to need. Essentially, what happened, guys, is I made a boo-boo. I made a mistake, and I left my dang laptop charger at home. So I am currently making sure that we're able to do our technical analysis, even though it'll be a little bit jank, on a different laptop. So we have a ton of laptops at the office right now. So I just commandeered one of them. So we're going to use this laptop. We're going to have to go back in and pull up all of our technical indicators again, but that's okay. Anyway, we got oh my again. Mike Lowry in chat. We got Grand Roofing Incorporated. I really like your name, friend. That's a good name. Justin Eubanks in chat. Jeremy Shorter in chat. Mike Lowry, of course, can't forget him. Crypto Ben Franklin. Looks like everybody decided to tune in today. I usually say every day I wake up breathing is a good day, which is true, but today it's a good day because the sun is out. That is the exact opposite where we are because it is pouring down like crazy. I feel like we're in Edinburgh right now, guys. There's so much rain. CBD Studies in chat as well. Grand Roofing said, good morning, green names, and good morning, moderators indeed. Jeremy Shorter. Matanya Holmes said, is the stream dead? Stream's not dead. Jebb's brain cells are apparently dead because I forgot laptop charger. Jebb, come on, man. You can do better than that. I've only been doing this for 5 years. You'd think I'd have it down by now. Well, I'll make mistakes, but sometimes they're more embarrassing than others. Grand Roofing said, there he is. Let's see, who else do we have in chat? Matt C., Adam Rorick. Kevin just mad he lost all his money, so he's going to blame somebody, but not Sam, shaking my head. Yeah, there was a pretty funny little clip of Kevin O'Leary going back and forth with Senator Elizabeth Warren that I watched. Looks like you're in 3D there, Jebb. Really sharp image today. Thank you. Yeah, my hair's a mess, but the set is looking pretty good. I'm pretty excited about how this is turning out. We haven't even really gotten started yet. Very excited for it. Shadrach Frost in chat. We got Matt C. in chat. That $15 million he got will have to be paid back. That's a good point. He might end up having to pay some of that back, Kevin O'Leary. Let's see. Buck Slayer 4x4 in chat. Mitch Shaw in chat. You got to watch him in Congress, the other interview he did. Yeah, I probably will be taking a good look at some more of those things. Today's stream might be a little bit off, base just since I'm on the wrong laptop here. But we're going to do our very best, and we're going to bring you some cryptocurrency news. Give me just 1 second, and we're going to jump on over to CoinMarketCap. Let's do it, guys. As you can see, Bitcoin's currently trading at $17,482. Ethereum sitting here at $1,270. We got the stable coin staying stable. Of course, we got Tether trading at $1. USD coin sitting at $1. BNB sitting at $263. This is one that we're going to want to take a close look at. And then we have this, Coco's BCX, which came out of nowhere and is trading at 60 cents. And year to date, it is massively down, but for some reason, it's sitting up here with a market capitalization of $25 billion. No, that's not exactly right. What's going on here? If you've seen this and you're wondering what in the heck is happening here, the circulating supply right now is reportedly 42 billion Cocos, but that's not true because the actual maximum supply is only 100 million. So this is an error on TradingView's part, or on Coco's part, or on both of their parts. But whatever happened here, this cryptocurrency is getting a lot of media attention, if you will, that it doesn't necessarily deserve because it's not actually worth $25 billion. So if you see this and you're like, man, I should go and buy some of that, I would be careful with that assumption. People might buy it right now just because it's getting a lot of attention, but I wouldn't go jumping into a project that you don't understand just because for some reason it's sitting at number 6 on CoinMarketCap. We've also got Binance USD sitting sideways here. Again, guys, we have some news coming out from Binance today that we're going to want to take a look at. A lot of people are very skeptical about Binance at the moment. And we want to make sure that Binance is solvent. We want to make sure that it's stable. And we want to make sure that Binance is going to be able to carry forward into the future because Bitcoin is a massive part and is going to continue to be a huge part of the global economy moving forward. I'm even going to break down how that is going to play in some way today. So stay tuned for that. I'm really excited to share with you some of my thoughts on that. Cardano sitting at 30 cents. Polygon sitting at 88 cents. Down quite a bit over the last 7 days, as you can see here. Polygon down, not Polygon, Polkadot down 2% over the last 7 days as well. And now you're going to laugh at me because I have light mode over here on TradingView, but we're going to do TradingView old-fashioned. We'll use this as a good example for how to set up TradingView. If any of you guys have not seen the content I've made over the years on setting up TradingView, this is what a generic TradingView looks like before you add all the bells and whistles to it, like what I normally do. Now, the thing here is that there is basically it's the exact same chart that we're used to, and I'm not going to go through all the setup because we can do without all of the bells and whistles for a day. But the main thing I want to look at here is the hourly chart on Bitcoin. You can see here Bitcoin has been, and I know, forgive me, I know your eyes are burning with the light screen. Don't really know why that's there, but yeah. So you're going to want to pay a close attention to TradingView, and we're going to look at that here in just a second. But before I even get onto that, I just want to back up, and I want you guys to know basically what the future of Bitcoin looks like. I want you to know what Bitcoin is going to look like over the next several years and what impact it's going to have on the global economy. So as I try and fix this in the background, luckily I can multitask. I will do both of these things at once. The thing that you're going to see happen here in the next several years is you're going to see a massive shift in the global economy moving away from globalization, and you're going to see a major shift towards not so much globalization, but you're going to see a shift towards different nation states having their own sovereignty over their own territory again. You're going to see a era and a time where we are going through a massive shift in the globalization movement. We're going to be seeing a period of deglobalization, more or less, with what's going on in Russia and Russia attacking Ukraine, with what we're seeing happen in China and the protests and the massive pandemic outbreak that they're undergoing right now, which will likely completely grind their entire industrial society to a halt for the next 3 to 4 months as they try and get that under control. As you see the conflict continuing through the winter with more mobilizations in Russia, with more delayed maintenance coming online with some of the captured equipment from Kiev that they captured from the Russians. The conflict over there is going to get stronger. There are going to be even deeper famines moving into next year, and there's going to be more protectionism and isolationism happening on the American front. You're going to see the United States starting to draw itself in. One of the things that we've witnessed over the last 20 years is a move away from playing the global police state that the United States has played on the geopolitical stage for a very long time. In doing so, you're seeing a shakeup of the chessboard. I've talked about this extensively on the channel, and that shakeup is something that we are referring to as a deglobalization. Essentially, the United States is not guaranteeing free trade as much as it used to. It's not guaranteeing free access to waterways the way that it used to. And so it's becoming more difficult, and is going to, especially over the next several years, as more rogue states start basically enacting piracy, it's going to become much more difficult for nations to have trading partners halfway around the planet, because their cargo ships are going to be able to become under attack, or there's going to be different issues with insurance. For example, right now, Russia cannot, this is effective in January, cannot sail through any international waterway of any NATO ally or any EU ally, any member state of both of those alliances, without insurance. Globally, they can sail basically nowhere without insurance on their merchant vessels. And pretty much every single nation that focuses on insurance has decided not to give the Russians insurance on their vessels. So the Russians are going to have to figure out a way to insure their own vessels, which is a complete nightmare. And if that insurance falls at all in any way, shape, or form, then every single one of these waterways, we're talking about the Bosphorus Straits in Turkey, we're talking about the straits between Denmark and Sweden, both of those being NATO allies or members of NATO all the way just full on. Both of those straits get shut down. Russia is no longer able to receive shipping or send shipping, and they fail as a modern state because they cannot get their oil exported, they cannot make money, and they cannot buy what they need to continue the war effort. My point is that around the world, similar things like this are starting to take place. It's becoming much more difficult to do international maritime trade. And a large part of that has to do with the United States pulling back and focusing on our sphere of influence, the North American region, and building more strong trading partner and trading alliances with Canada, with Mexico, with the rest of South America and Central America. The world is going through a period of deglobalization, and you're probably wondering, well, Jeb, what does that have to do with Bitcoin? Well, again, Bitcoin exists on the geopolitical stage. It's a pawn. There are queens and kings and rooks and bishops and knights and a lot of other pawns. Bitcoin's one pawn on an entire chessboard, but the board is set by geopolitics and by the interaction of these different nation states on the world stage. What is about to change is going to, in some ways, impact Bitcoin for the better, and in some ways going to impact Bitcoin for the worse. Let's start with the better. In the next 5 to 10 years, you're going to see a period of deglobalization. In doing so, you're going to see a lot of states having to fend for themselves. I'm not talking about NATO. NATO is probably going to be stronger than ever unless Russia completely collapses and then it loses its cause for existence in the first place. That probably won't happen to the fullest, causing NATO to dissolve, but it probably will remain strong. But when you're looking at Africa, South America, Southeastern Asia, you're looking at China, which is probably going to fracture into multiple different nations in the next 10 to 20 years, if not even sooner, with how hard of a collapse it's going to go through. You're looking at Southeastern, as far as on a world map, nations such as Australia, New Zealand. A lot of these alliances and a lot of this interdependence that we have globally is going to start to break down. And that's going to lead to a lot of, for lack of a better term, apocalyptic scenarios in many of these different nations, many of them being in South America, Southeastern Asia, and in Africa. These nations are then more than likely going to have governments that are going to embark on extreme inflation to try and subsidize their own economy and allow it to grow, because the growth impetus that these economies had for them vanished when globalization started to fall apart and the United States started to rely on manufacturing in its own backyard. China lost the ability to even operate as the world factory, and Russia is blowing up at the seams because of demographical and cultural issues and massive economic and sanction-related issues. There are probably over 100 nations that are impoverished or developing that are about to lose what backing they did have by the modern developed world, and when they do that, oftentimes what governments do to try and bail themselves out of that situation is they print money, and a lot of it. And so when I say that this is going to be good for Bitcoin, make no mistake, this is not good for those nations. You see, a lot of these nations are going to get left behind. You see Nigeria growing very aggressively. You see South Africa growing very aggressively. You see Brazil, Argentina, Chile. Many of these now, Brazil, Argentina, and Chile, they're in the United States sphere of influence, so they'll probably be taken a little bit better care of. But especially in sub-Saharan Africa, many of these nations that are growing very quickly right now, a lot of that growth is probably going to stop. At least it's not going to completely stall, but the industrialization is going to more than likely stop. They have a demographical makeup to be able to grow their economies even without the rest of the world's help. But industrializing is going to stop when they don't have the same kind of influx of raw resources and technology and investment and capital and foreign expertise and skill coming in from the first world, because everybody's starting to hold their cards closer to their chest and globalization is falling apart for the next 20 years. It'll probably come back, but for the next 20 years or so, it's not going to be the way that it was. These nations are going to embark on massive spending sprees and inflation, and many of them are probably going to become hyperinflationary, which is, again, bad for the people of that nation. Bad for that nation. Period. Terrible. Hyperinflation is never good for anyone. But it does open up a massive, massive, massive room, opportunity, if you will, for Bitcoin, because Bitcoin is non-inflationary. And we're going to talk about what's going on Capitol Hill here in a second. Of course, yes, Elizabeth Warren and Kevin O'Leary went back and forth. I'm not going to be able to show you the clip. It was very short, but basically Elizabeth Warren was like, Bitcoin is used for money laundering and terrorist activity. I can't say that on YouTube, but all of this stuff. And, Mr. O'Leary, you just lost $10 million in FTX, but you're still supporting crypto. Do you believe that crypto should have to have the same AML, anti-money laundering, and KYC requirements as the rest of the industry? He's like, well, yes, but wait a minute. Hang on. You're adding a bunch of stuff on there. And Elizabeth Warren's like, to answer the question, he said, well, fine, yes. If you want to know what the back and forth was, that was pretty much the back and forth. We're going to talk about that stuff in a minute, but that's the good news for Bitcoin in the next 10 years. Is that that's the geopolitical landscape that we're moving into. That is the geopolitical deglobalization landscape that the world is moving into, and Bitcoin will come in to fill the gaps in many of those places where a stable, solvent currency is needed. Okay? So that's the good news. Here's the bad news. The bad news is, in this deglobalized world, the US dollar grows stronger than ever, because all of its competitors lost a lot of what was propping them up. In the post-war order, post-1945, after the fall of Germany, after the fall of Japan and the Soviet Union was only rising, during that time, the United States was one of the only world powers, in fact, it was the only world power, that was not completely decimated, that didn't have to spend 20 years rebuilding infrastructure, businesses, culture, society at large. The United States was on the other side of an ocean. It had no attacks on its homeland to speak of almost at all. There were a few from U-boats. There was one landing right outside of New York of like 4 dudes. There was nothing that happened back home other than culturally. There was not a shooting war that took place in our homeland, the lower 48. Obviously, there was an attack on Pearl Harbor, but in the continental 48, there was no attack whatsoever of any kind of serious significance. The rest of the world had to completely rebuild itself. The Soviet Union, Germany, it got split in 4, and then in 2 because the Allies combined their 3. Berlin got split in half. France was leveled. Italy was leveled. Britain, London was leveled. Japan leveled. China was in the middle of a revolution. The rest of the world was in chaos, but the United States was already coming out of the Great Depression. They were already growing aggressively, and then we just so happened to become the most powerful military, economy, culture, society on planet Earth, and we were also allied with basically everybody else. So what we did is we bought everybody's allegiance by saying, you let us set your defense policy, you join military alliances with us, and we'll patrol the world's oceans so you can trade with anybody and rebuild your economy quicker. That's what we did in Japan. That's what we did in Europe. Now, Japan and Europe are basically satellite states of the United States. That's starting to come to an end too, because the United States is starting to shed off all of its, not imperial colonies, but it's almost economic colonies that we kind of established in the post-war order. It's starting to shed all of that. The Europeans are starting to have to fend for themselves because the United States, even under Joe Biden, people don't think this, but even under Joe Biden, there's a lot of policy that is bringing manufacturing, bringing economic stimulus back to the States rather than to Europe, rather than to China, rather than to Japan. Many of these different nations are going to start having to fend for themselves. The US dollar is going to then get very strong, not just because the dollar is stronger, but also because the other currencies are weaker because of the fall of globalization. Globalization was good for everybody in some ways. It was bad for everybody in others, so don't grab your pitchforks because I know people are going to try and burn me for that one. Trade-wise, it was a good thing for most people. It was good for the United States, but it was the least good for the United States because the United States has the best ability to fend for itself of every other nation. With the collapse of globalization, the US dollar gets stronger, especially relative to everyone else. And then everybody who was going to invest in Bitcoin in the first world, why would they invest in Bitcoin? They've got a stupidly strong dollar. They've got a rampaging United States United States and North American economy that they can invest in with a massive onshore of manufacturing, especially the chips industry, going down around the Texas Triangle, going on down around the Arizona, New Mexico, California, Texas border with Mexico. That area is going to become an industrial megalopolis over the next 10 years. Petrochemical, semiconductors, infrastructure is going to go through the roof down there. The United States is going to grow a lot, and it's going to be impacted by this deglobalization event, but not as bad as Europe, especially Germany, not as bad as China, not as bad as Japan, certainly not as bad as Eastern Europe and Russia. So when that occurs, the big money that we were really expecting to come into Bitcoin, the trillions of dollars sitting on the sidelines, some of it will still come into Bitcoin. And this is really going to have a lot to do with the politics. Is Bitcoin viewed in 10 years as an addition to the U.S. economy, or is it viewed as an opponent to the resurgent U.S. dollar that was already the world reserve currency, but is going to stay as the world reserve currency and get an even stronger foothold as the world reserve currency? Is Bitcoin seen as an ally to that or an opponent to that? If Bitcoin is seen as an ally to the world reserve currency status of the US dollar by supplementing it and allowing for the United States to take off even more so as the industrial powerhouse of the 21st century, then Bitcoin will grow and we'll see those trillions of dollars flow into Bitcoin. You'll see a multi-million-dollar Bitcoin. If, however, this deglobalization event takes place in another way and people start to view Bitcoin as an opponent to the U.S. dollar, as Mr. Sherman, I showed you yesterday, does. He believes it was the biggest existential threat to the U.S. dollar that there is. Senator Warren, who believes that it is a conduit for certain activity that I can't say the word of on YouTube if I don't want to get demonetized and taken off the platform. If that is the viewpoint that takes hold, and Senator Warren and Mr. Sherman's viewpoint of crypto takes hold, and people view Bitcoin as public enemy number one because it is contrary to one of the biggest military and economic strengths that we have, which is the world reserve currency status of the US dollar, then Bitcoin gets harder to find investment in the first world. Regardless of what happens, I think you're going to see a whole lot of third world, developing world investment in Bitcoin, even if it's just by individuals. But that's really who we're after. We're really after the retail because we're not after a giant valuation on Bitcoin. We're after helping people at the core. And if we make a lot of money doing it, then great. But the point is to help people achieve financial sovereignty. If we can help 1 billion people in sub-Saharan Africa achieve financial sovereignty because they're using Bitcoin, great. That might not do a lot to the price. The trillions of dollars flowing into the market will do a lot to the price. But if you build a strong user base, the price will come eventually. You just might have to wait longer. At the end of the day, the geopolitical stage is set. The next 10 years are pretty predictable at this point. And how Bitcoin interacts in that is going to be one of the core themes economically of the 2020s, I believe. I think by the end of this decade, we're going to see what the rest of this century is going to look like for crypto. These are the formative years, if you will. Bitcoin turned 13 this year. We're entering the teenage phase. And golly, is Bitcoin going to get a little bit hormonal in the next few years as it's coming up against Congress, as it's coming up against the Federal Reserve, it's coming up against the ECB, which, by the way, we're going to talk about that in a second. The ECB just raised their rates also 50 basis points in the same way that the effective federal funds rate was raised yesterday. So let's read chat a little bit, and then we will answer some questions and jump into some of these news stories. If you guys have not smashed the like button, hit the like button. Really appreciate all of you guys for tuning in. We got 634 people watching. Thank you guys so much. Really, really appreciate it. Go ahead and smash the like button. Let's see if we can't get up to 300 likes here in just a second. Let's see. $3 billion of withdrawals on Binance. CZ business as usual. Lol. Bet SBF is mad. Yeah, that's pretty. Yeah. Yeah, I have an article up for you on that. It's anyway, we'll talk about that in a second. It's pretty funny. It's actually really not funny, but it's one of those things. It's not funny, but because it's so not funny, it is. CBD studies in chat. It's the lack of coffee, probably, man. Let's see. It's going to be interesting to see if all the politicians will have to return the donations. That is going to be very interesting. Definitely want to keep an eye on that. Got Matt C in chat again. Jebb, do you think Powell will raise rates over the entirety of 2023, or do you think he will be forced to pivot at some point so they don't over stimulate him? I don't know. I think that you're going to see the interest rates go to at least 5.5, if not 6. And I've explained this several times recently. The reason I believe that is because there's 3 major things, and I'm getting at risk of repeating myself and sound like a broken record here, but there's 3 major reasons why the Federal Reserve wants to raise rates as high as they possibly can. And it's set on a backdrop of 2 things. First and foremost, the United States economy is a lot stronger than the Fed banked on. They probably thought that by now the massive interest rates would have crashed the economy and they would have had a plateau already. So they're in uncharted territory and they're realizing, wait a minute, we can push this thing further than we thought. 2, it's also set on a backdrop of a geopolitical economic world war. We are in the middle of World War III, just not a shooting war. Not a shooting war. And it's very unlikely that it would become one, God forbid. But economically, you betcha the whole world's invested in this conflict between Russia and Ukraine. This is the tipping point, the trigger event that has completely destabilized the entire world order. Literally. Globalization is coming to an end as a result of this. This is the first time in 30 years that you've not been able to get on a commercial aircraft and fly anywhere. You can't fly over Russia right now. There's no fly zone. It's not a no-fly zone. It's a whatever the word for it is. I think it is a no-fly zone, actually, is the term I'm thinking of. It's not a military no-fly zone, but it's restricted airspace. You're not allowed to fly there. They shut down their borders. Everybody else shut down the borders because people don't want to get a rocket to the belly of their Boeing 747, understandably. This is the first time in 30 years that we have not seen free trade globally and free airspace globally. First time. I mean, there's been a few exceptions to that. Desert Storm, the Iraq War. We've seen some exceptions to that, but not many. This is the complete end of the era for that. So that's the other backdrop that the Fed is raising rates under. Number 1, the U.S. economy is a lot stronger than they thought it was. Number 2, the world is a lot less stable than it used to be. Even just 6 months ago when they started raising rates in March. They started raising rates a month after the war began. I don't think that was a coincidence, by the way, because they were just dealing with the high inflation until that point. I think the conflict is actually one of the things that triggered Jerome Powell and the Fed to start raising rates. I can't prove that, but I do believe that's the case. Now, there's 3 major reasons why they want to raise rates. Number 1, hiking rates gets inflation under control. Don't ask me why people believe that it does. Don't ask me why it actually does. But there does seem to be a correlation there. It's complicated. There is a somewhat reasonable explanation for that. Basically, if everything's getting more expensive, you make the cost of money more expensive, then people don't have as much money on credit to go out and buy things, raising the price of the good so the inflation comes down. Basically, you slow down economic activity so the inflation stops. It's more complicated than that. That's the first reason they're hiking rates. Second reason they're hiking rates is because they want to have an economic tool in their back pocket when a recession globally does happen, because deglobalization has not even so much fully begun yet, but it's starting. It started February 24th. It actually started January 15th or so of 2020 when the pandemic started taking over. But it really got confirmed after the conflict started on February 24th of this year. It's been accelerating. It's going to take another few years for it to completely unravel and for manufacturing to move all over the planet. People were trying to manufacture things in China. Can't afford to anymore. Number 1, China's way too unstable. Number 2, the political situation in China is far too uncertain to invest in it for the next 10 to 15 years. You don't have new plants being built over there. Number 3, the cost of labor's gone up. The cost of labor has tripled in the last 8 years in China. You cannot afford to make things over in China the way that you could 10 years ago. And that's probably why if you look on the back of something, it doesn't say made in China very often anymore. It says made in Taiwan. It says, not made in Taiwan. It says made in Thailand, Vietnam, that's a big one. Pakistan, India. It says made in those other nations where the cost of labor is cheaper. If it's a cheaper product, like a cheap t-shirt from Dollar General, you're probably going to not see it be made in China the way you would have 15 years ago. So that's the backdrop. But of course, again, you've got the first reason. They're trying to get inflation under control. Number 2, they want to have an economic tool so that when this gets a lot worse than it is now, and in 2 years it will be a lot worse, just so you know, next year is going to suck, especially if you don't live in the first world, and especially if you depend on food crops coming in from Russia, Ukraine, or China, which China doesn't actually export that many food crops, but Russia and Ukraine, next year is going to suck. I'm sorry. It's going to be bad. And also, especially if you rely on fertilizer from either one of those nations, which, by the way, pretty much everybody on planet Earth does. Anyway, so they want to have that economic tool so that they can slam those rates straight down to the floor, or down probably to about 2 to 3%, so they can keep something in their back pocket if that recession does start to come, making money cheaper, stimulating the economy, and keeping the United States as the number one most powerful economic powerhouse on the planet. Number 3, there's another reason why they want those rates very high, and that's why they are hiking them as aggressively as they are, and they've outstripped the pace of the ECB, the Bank of England, the Canadian Central Bank, whatever it's called, already by leaps and bounds, and that is because they want to maintain an extremely strong dollar, and this ties into the last point. They want to maintain an extremely strong dollar so that they have a very strong dollar to buy military hardware for, so that they can send it to Ukraine and have the Ukrainians fight the war for them. The U.S. doesn't want to get into a shooting war with Russia. They never have wanted that. I don't think we've ever been in a shooting war with Russia, but there's always been an economic battle going on with them since 100 years ago when the revolution took place. And that's the same game afoot right now that we saw during the Cold War. It just so happens that Russia is far weaker and far more feral than it was back then. Russia's backed into a corner now more so than it has been ever in its entire history, even more so than when the Germans were knocking on their doorstep in 1942. That's why we are building out a very strong U.S. dollar the way that we are right now, so that we can use that U.S. dollar and the strength of that dollar and the strength of our economy and the strength of our manufacturing sector to ensure that the Russians don't run over Ukraine, because if the Russians do run over Ukraine, you can bet your bottom dollar they're going to try to attack another nation, and there's not many other nations in that region other than NATO allies. And if Russia attacks NATO, NATO beats them on the conventional battlefield, Russia's backed into a corner even more, and the only thing they have left to use are nuclear weapons, and you don't want that. How does all this impact Bitcoin? Again, if you want to understand Bitcoin, especially right now when, quite frankly, there's not much going on in crypto, it's a good time to learn about the actual stage upon which Bitcoin is playing. Because you can understand the pawn that is Bitcoin all you want, but if you don't actually see the entire board, how do you know where to move that pawn? It's only got one move. It moves forward, you know. Maybe we're taking the analogy too far. If you don't understand the game you're playing and you only know the piece, then what good are you at the game? That's why we need to understand geopolitics, the global financial situation, and of course Bitcoin. And we have to also look at regulation and the regulatory environment in the United States and the European Union. Anyway, let's read chat here for a little bit. Really appreciate all of you guys tuning in. Jebb, I hope you're investing in some lead and silver. Don't have any lead and silver in there. Jebb, what are your educational qualifications, brother? New here. I'll be honest, guys, I don't have a whole lot of educational qualifications. It is my job and has been for half a decade to study these markets. So if that counts, that counts. But I dropped out of college to go start the business here. So, yeah. Love the analogy, Jebb. Teenager, haha. Yeah, that's right. That's what we are in. We are the teenager right now. So also, by the way, because my trading view is acting up, I'm just going to kind of narrate it for you. Essentially, Bitcoin dropped over the, and I know you can't see the chart, but this is only going to be like a minute of content because there's not really much to talk about anyway. Bitcoin tried to rally up above $18,000 yesterday. We were hoping and praying that there was going to be a rally coming from the EFFR coming back at only 50 basis points. Didn't happen. Bitcoin fell over. Why? Well, I told you yesterday in yesterday's stream, there's a possibility that we could have jump quite aggressively. But there's also another possibility that people will realize, okay, great, we had a 50 basis point rate hike. That's less than 75, but it's still 50 basis points. Still 0.5%. The economy still got tighter. And so it's good that they tapered rates, but with everything going on in the world, people might also start realizing that we aren't necessarily going to see 25 basis points in February 1st at the next meeting. We might see 50, or we could see 25 and just keep pushing up at 25, or maybe we plateau at 4.75 and I'm wrong. But I think they're going to hike it even more aggressively than that. In other news, and so, by the way, just so you know, Bitcoin dropped. It's trading at 17,472 right now. Big whoop. Not a lot going on the chart. It's a good day to have my chart mess up if we're going to have a day where it messes up. Now, we also saw the same thing happen yesterday in the ECB. I don't know if I actually have I don't have the article up here to quote here. But I can just go ahead and tell you. I don't believe I do. The European Central Bank just hiked rates again from 1.5 to 2%. So the ECB, as you can tell, is behind the United States. Rates right now are what, at 4.5, 4.2 to 4.5, probably around 4.33 or something, because it was actually 3.83. They called it 3.75 to 4. That was the range that the federal rate was in. The federal funds rate was at. The ECB hiked rates yesterday also. That's the news that everybody brushed under the rug. But it's actually very important because the Europeans are trying to hike rates and do the same thing that the United States is doing. There's a few problems with that. Number one, they draw all of their natural resources from Russia, more or less. They draw timber, they draw wheat, they draw food staples, they draw natural gas, and they draw oil. Those are the major inputs of a modern industrial society. I also forgot steel. They draw a lot of their pig iron and their steel from Russia and Ukraine. Both of those markets are offline either because they're sanctioned or they're leveled. The German economic manufacturing system, which is the heart of the economy of the European Union, is about to go offline in the next 6 months. The entire German economic model is collapsing in on itself. It's completely collapsing in on itself. And this winter, it's only going to get worse. They have a huge energy problem. They have a huge manufacturing problem because they can't get the raw resources that they could 6 months ago, 12 months ago to make stuff like they did. Germany was the China of Europe. That's going offline because the imports that they were relying on, they can't get anymore because the people they were importing for are hostile or they have been sanctioned, or they are offline. The Ukrainian GDP is expected to shrink by 50% this year. They could become a net importer of food in the next 2 to 3 months. The reason that's a problem is because they were one of the world's largest exporters of food. So if you start having to import food into Ukraine, you run into a problem where not only are they not producing, they're actually now consuming. Where does the rest of that food go? We've seen with Russia being sanctioned and Ukraine being offline, the port of Odessa being blockaded, and food rotting in the silos in the port of Odessa, where it's normally shipped out to northern Africa and Syria and the Middle East, you've seen almost 10 to 15% of global food production go offline. That's the kind of thing that causes a famine. And luckily, we've gotten very lucky this year, but that's not going to necessarily continue into next year. It's only going to get worse while this conflict continues. And make no mistake, it takes years to rebuild the infrastructure and the society around that kind of agrarian export that you saw in Ukraine, especially in Russia, because Russia's probably about to go through a demographical, cultural, societal collapse in the next 3 years as a result. So they're not going to be more than likely exporting a whole lot either, and they were the world's #1 wheat exporter on the entire face of the planet. Germany's about to go through a major collapse. For many of those reasons, the rest of Europe is pouring a lot more money into military spending right now than they have been. You've seen increases in defense budgets, especially in Latvia, Estonia, Lithuania. Those territories and Germany, and you see Sweden and Norway potentially joining, Sweden and Finland potentially joining NATO. You see an expansion of the alliance, it becoming more militarily focused, and you see a shrinking of the industrial sector there. The European Union does not have the same backing that the United States does to hike rates very aggressively. Again, all of this ties right back into Bitcoin because that's the point here. This is crypto Jebb, not geopolitics Jebb. I get it. I know. But we have to understand Bitcoin through the lens of the actual game it's playing. And also, there's not much going on in Bitcoin today and over the last few weeks, so it's a good time to talk about it. Europe doesn't have the same kind of industrial might that the United States does to be able to afford hiking rates to 6%. If Europe hiked rates to 6%, they would collapse their economy. They would go into a massive recession. They could come out of it, but it wouldn't be good for them. It would be very bad for business. The Americans can do that because we're already onshoring a lot of manufacturing. That's been a trend under bipartisan leadership, somewhat under Obama's, very much so under Trump, and actually still continuing under Biden. We've seen a lot of onshoring of manufacturing as it's gotten too expensive and politically unpopular to invest in manufacturing in China. It's moving to Texas. It's moving to California, Southern California specifically. It's moving to Arizona, New Mexico. Some of it's moving into New England. Not much of it. A lot of it's moving into the southwestern portion of the United States. That brings about its own can of worms because there's no water down there, and the Colorado River is drying up. So Texas is doing very well for itself, but it's got a water problem at the same time and a heat problem also. A lot to unpack here. The point is the United States can afford to raise rates very aggressively. The European Union cannot. All right. Let's see. The philosopher's in chat said, yo, 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 what's up, Jebb? The sky on the ceiling. How you feeling, my friend? Let's see. Thank you for answering my question of power-raising rights over 2023. I always learn so much and have different perspectives broadened from you. Cheers. Thank you so much. I really appreciate that. Ukraine, known as the breadbasket. Yes, it was the breadbasket of Europe. It is now the pauper of Europe, waiting for donations of food and weapons. And, you know, they need them. If you're a voter in America or in Europe right now, the Russian-Ukrainian conflict is the single most important political issue, period, out there. And the reason is that if Russia wins in Ukraine, Russia marches on NATO and you could have World War III. So whatever issue you think is more important than that, try and reckon it with that. And if you still think it's more important, it's your vote, not mine. But realize that if Ukraine loses this war, Russia and NATO are knocking on each other's doors. And Russia's a feral animal right now. Putin is backed into a corner and he knows it. And you don't want that kind of person wielding nuclear weapons. Too late for that. Next best thing is you don't want him being given a reason to use them. Ukraine has to stand. For the sake of the stability of the global order, it has to stand. And a big part, and you might say, well, yeah, Russia's military sucks. It's true. That's part of the problem. You get a crazy person that's a glass cannon. They have a military that has absolutely no chance against NATO. They might be crazy enough to try it, though. NATO whoops them. Poland alone could probably whoop Russia right now with all the tanks they just bought. The only thing they have left is a nuclear force that rivals the United States. No good. All right. Let's go ahead and jump on to some Bitcoin news. We're going to take a look here at this article. Senator Sensei. What? S-E-N-S? It's supposed to be senator, right? Anyway. Anywho. Warren and Marshall introduced new money laundering legislation for crypto. This was put out today. It might have been yesterday, actually. I think it was yesterday. Yeah, it was yesterday, actually. And this is where Elizabeth Warren was interrogating Kevin O'Leary, if you will. The senators have created a harsh, sweeping bill to clean up crypto's AML/KYC Act that will benefit from further discussion in the next Congress. As the crypto sphere focused on the drama unfolding around FTX, United States Senator Elizabeth Warren and Roger Marshall introduced the Digital Act Anti-Money Laundering Act of 2022 on December 14th. So that was yesterday. The 7-page bill will expand the classification of a money services business, an MSB, prohibit financial institutions from using technology such as digital asset mixers, and regulate digital asset kiosks, otherwise known as automated teller machines or ATMs. If you ever say ATM machine, you're saying machine twice. Announcing the introduction of the bill at the Senate Banking Committee hearing, Crypto Crash, Why the FTX Bubble Burst and the Harm to Consumers. That sounds a bit like a YouTube title, but that is actually what's going on at the Senate Banking Committee. Warren, a vocal crypto critic, said, Senator Marshall and I introduced a bipartisan bill today that requires crypto to follow the same money laundering rules as every bank, every broker, and Western Union all have to follow today. She said that while she was interrogating Kevin O'Leary. I can't pull up the video here, but you can look it up. Senator Warren back and forth, I think is what it's titled as, is the YouTube video with Kevin O'Leary. Again, we've had Kevin O'Leary here on the channel, so I know how he can be, and it was interesting. I'd encourage you to go watch it. Under the legislation, money services businesses, a classification created by the Financial Crimes Enforcement Network, FinCEN, would be a custodial and unhosted wallet providers, cryptocurrency miners, validators, and other nodes who act to validate or secure third-party transactions, independent network participants, including MEV, maximum extractable value searchers, and other validators with control over network protocols. Unhosted wallets, miners, and validators were not previously considered MSBs. Why in the world would you consider a miner a money services business? Unless two reasons. Number one, you don't understand the industry. Or two, you're trying to hurt the industry. Or three, you're trying to hurt the industry for the sake of gaining popularity in the American public's eyes who just saw FTX crash, and you're trying to make an example out of crypto. Those are a few different possibilities. I'll let you choose. There's probably more as well. The bill also instructs the Treasury Department to create a rule banning financial institutions from interacting with digital asset mixers, privacy coins, and other anonymity-enhancing technologies. We always knew, Sorry, as I said, I'm still sick. Or I'm not still sick. I'm getting sick. My son shared something with me. He had a fever the other night. He's doing better now, but he shared it with me. My son's so kind. He shares everything with me, including his germs. I've warned you guys about this for years. If you're an investor in Monero or Zcash or some of the other privacy coins, it was always coming. We always knew it was coming. We always knew that there would be restriction on these things. And in fact, let's just take a look and see how Monero is doing. It's only down 0.5% today. Bill hasn't passed. Makes sense. But you can expect something like this to pass at some point. You can expect something like this to happen at some point. Do you think NATO will survive post-NATO-Russia fight? Did I hear that right? If nukes get involved, nobody survives. If nukes don't get involved, NATO will absolutely stomp Russia. That really depends on whether it goes nuclear. I am delighted to see Senator Warren acting in a bipartisan manner by joining with Senator Marshall in the introduction of this bill. Patrick Daugherty, husband of the daughter he doesn't, no, I'm kidding, head of Foley and Lardner's digital asset practice and adjunct professor of digital assets at Cornell Law School, told Cointelegraph in a statement. He acknowledged the bill's salutary effect of impeding more thoroughly the abuse of digital assets for crime, but expressed concerns about the loss of financial privacy for millions of digital asset buyers and sellers who are not criminals. And really, that's the problem that you run into when you have people that are not experts in an industry trying to regulate the industry. That's what takes place in small business all the time. You get a bunch of Congress people who don't run small businesses, which is strange because running a campaign is almost like running a small business, but a lot of them still don't understand it for nothing because they're not the ones doing it. They hire people to do it for them, and they don't understand it because they're up in their high castle. It happens in oil, happens in green tech, happens all over the place. You have these talking heads in Congress that are trying to regulate something, they don't understand it. It does not strike me that Senator Elizabeth Warren understands crypto that well. I have not had a chance to read through the bill, so I don't want to go into too much more detail or criticism about it because I haven't had a chance to read it, but I will say I'm not really sure why you would regulate a miner as a financial services business if it's not holding customer assets. That's something that I would definitely encourage you guys to chew on. This is an interesting article as well. Just going to kind of read the headline a little bit here. Binance put FTX out of business, Kevin O'Leary said. A U.S. Senate committee heard details of the investors' conversation with Sam Bankman-Fried before the collapse. If you don't know, O'Leary was a FTX spokesperson. The collapse of FTX was triggered by Binance, investor Kevin O'Leary claimed at a December 14th United States Senate committee hearing about the crypto exchange's meltdown. O'Leary, who is a paid spokesperson for FTX, provided details about conversations with Sam Bankman-Fried in the days before FTX filed for bankruptcy. During his testimony, O'Leary said he had questioned SBF regarding how customer funds were used in the past 24 months and was told that almost $3 billion were used to repurchase shares of FTX owned by Binance. When asked by Senator Patrick Toomey why FTX failed, O'Leary replied, "I have an opinion. I don't have the records," but before revealing his views that the head of Binance and FTX were at war. O'Leary said that regulation was at the core of the silent war between the heads of the two crypto exchanges. As owners of a nearly 20% stake in FTX, Binance and Changpeng Zhao had to comply with regulators' requests and compliance standards in different jurisdictions. Apparently, according to Sam Bankman-Fried, CZ would not comply with regulators' requests in different jurisdictions to provide the data that would clear them, FTX, for a license. The only option the management team and Sam Bankman-Fried had was to buy him out at the extraordinary value close to $32 billion. That's the tricky thing about raising capital, is that you have to actually provide a valuation, and then you have to use that valuation to buy back shares that you were trying to get back. So, yeah, he basically made Binance a lot of money if they were going to try and do that. The share price has hurt FTX's balance sheet, said O'Leary, and Zhao's decision to liquidate Binance's FTX token, FTT holdings, at the beginning of November, citing recent revelations that have come to light, and the post-exit risk management reason was intended to push down the token's price, O'Leary said. Whether it was intended to push down the token price or not, it did, and it did lead to the falling, technically, from a technical analysis and chart perspective of FTT, which more than likely contributed but didn't fully cause the insolvency of FTX. In my view, and I've looked at this quite a lot, FTT was more than likely going to drop below $21.88 anyway. That was the level of support that we were paying attention to, and and FTX was more than likely going to go insolvent and bankrupt at some point anyway, because first of all, FTT had no real value, and second of all, they were insolvent in a lot of other ways too. It wasn't just because they were heavily invested in FTT. That wasn't the only problem. A lot of the problems were systemic and were going to come apart anyway unless there was a massive restructuring that took place at the business. In my view, my personal opinion, these two, in an unregulated market with this incredible business in terms of growth, were at war with each other, and one put the other out of business intentionally. Now, maybe there is nothing wrong with that. Maybe there is nothing wrong with love and war, but Binance is a massive unregulated global monopoly now, and they put FTX out of business. Some of these statements are true. Some of them I couldn't tell you. Binance is a massive global monopoly. Is it unregulated? I wouldn't necessarily say that. Put FTX out of business? Maybe. Whether they intended to or not, some of their actions definitely contributed to it. Although it was FTX's fault, because anybody should have the right to dump the asset or the stock at any point, so long as they can find a buyer. This nascent industry is culling its herd. Going or gone are the inexperienced or incompetent managers, weak business models, and rogue, unregulated operators. Hopefully, these highly publicized events will put renewed focus on implementing domestic regulation that has been stalled for years. Other jurisdictions have already implemented such policies and are now attracting both investment capital and highly skilled talent. In the U.S., we are falling behind and losing our leadership position. Nothing against Kevin O'Leary. He's been on this channel, but one of the things he said in the interview he did with us about a month and a half, 2 months ago, was that as Bitcoin's dropping, you're going to see the culling of idiot managers. That was his phrasing. A week later, FTX went bankrupt. Do with that what you will. Move on here. 48 days, 3 hours, 5 minutes, and 43 seconds. We're going to see the next FOMC meeting, and they are now predicting that it is going to be jumping by, I believe this would be 50 basis points, correct? We're sitting at 4.25 now, right? Yes. We're expecting that we would be jumping right here. So they have a new prediction, and that would be right there, jumping to 4.5 to 4.75. I believe that'd be a 50 basis point rate hike. I could be wrong on that, but there is also this chance over here of a 75 basis point rate hike, and it's actually higher than what we've seen at this point. So that's just what CME is predicting. We're 48 days away. A lot can happen in 48 days. The decision's far from made. A couple more things. Only 1% of people can handle crypto self-custody right now, says CZ, Changping Zhao. CZ is making a point here that unless you are very technically minded, you're probably going to end up losing your money if you hold money in a crypto wallet on your own. And as much as it's an unpopular opinion, I kind of got to agree with him. I wouldn't say 99%, but to a certain degree, he's right. Binance CEO Changping Zhao has cautioned the crypto community about self-custody, suggesting that 99% of people choosing to take possession of their crypto will likely lose it in one way or another. That means probably not necessarily lose all of it, but lose some of it. And the reason for that, if you're not familiar, is if you send Bitcoin to the wrong wallet, it's gone forever. It disappears. There's absolutely no way to recover it or retrieve it. You send it to a wallet that doesn't exist. You can't even hack that wallet, which is ridiculously hard, frankly, basically impossible anyway, to get it back because it didn't go to a real wallet. It went to nowhere. It's gone forever. That's actually, and this is not a sponsored segment, that's actually why one of our sponsorship partners, Presend, exists. And again, this is not an ad placement. This is not a sponsorship right now, although it will be in the future because I really like the company. That's why Presend has the software that stops you from sending it to a fake wallet. Basically, what they do is they allow for you to look at the wallet. They have software that checks the wallet to see if it's real before it sends it. Basically, does a check for you so that you don't lose it. And there's also an insurance fund, so it's pretty cool. But CZ's right. Most people are going to end up losing money if they are self-custodying all of their money, especially if they have it in a lot of different wallets and it's a complex system where they're constantly transacting cryptocurrency. If that's the situation, then yes, a lot of people are going to lose money and it's going to suck. And that is why centralized entities and exchanges are so powerful and popular right now, is because there is no way to have security outside of a central exchange in the form of sending transactions. If you send a transaction to the wrong wallet address, but it's actually a Binance address, but it's actually a Coinbase address, you can normally call them and they'll give it back to you. Or it'll reroute itself automatically and magically show up where you were trying to send it. I had that happen one time. I sent money to the wrong Coinbase address, although both of the Coinbase addresses were attached to the same wallet, and it showed up magically anyway. It's very lucky. But I did make that mistake, and I wish I had something like a Presend to make sure I was sending it to the right place and checked it. This is not me saying that we shouldn't do self-custody. This is me instead saying that we need to make sure that we are extremely careful, that we have as simple of systems as possible for bookkeeping and financial management with our cryptocurrency as possible, and that we are very well educated and studied on it. I'm not saying that we should never do self-custody because I think that is a good thing. However, and it is in CZ's best interest to say this, A lot of people will lose money if they're trying to do it themselves. He wants to say that because he wants you to leave money on exchange. This could be a way of him saying, hey, that $3 billion just got withdrawn. Why'd you do that, huh? You know, it's safer if you leave the money on exchange. It's safer if you leave the money with us because we'll make sure it doesn't get lost. Almost a way that he can come out and say that without coming out and saying that. Now, there's another one here. Another article I want to read to you, and then we're going to wrap it out. Crypto community, and we're going to go 5 over since we were 5 late. Crypto community members discuss bank run on Binance. According to CEO Changpeng Zhao, Binance has seen outflows of an estimated $1.14 billion from the exchange. It's actually higher than that now. This is from a couple of days ago, but it's only gotten higher. Within the past 24 hours, cryptocurrency exchange Binance has seen outflows of over $1.8 billion due to rising FUD within the crypto ecosystem. I'm surprised it took that long for that to happen. I was expecting there to be a bank run on Binance very, very early on. According to Binance's, from the FTX debacle, Binance CEO Changpeng Zhao, the exchange has seen this before, and he believes it is good to stress test withdrawals on each centralized exchange on a rotating basis. We saw some withdrawals today, net 1.14 billion-ish. We have seen this before. Some days we have net withdrawals. Some days we have net deposits. Business as usual for us. I actually think it's good to stress test withdrawals on each centralized exchange on a rotating basis. Box mining. Probably haven't heard his name in a while. I do have to say, props to Binance for handling the withdrawal efficiently. Did 10 transactions all handled within an hour. The bank run on Binance comes a month after CZ triggered a bank run on FTX. That's a very shocking statement. Very, very, very shocking statement here. That may be true, but that's definitely an allegation. That's not proven. And I don't have any allegiance to CZ, Sam Bankman-Fried, FTX, or Binance, by the way. That's not confirmed, which led to liquidity issues and its eventual collapse. Now, they did kind of trigger a bank run when they dumped all their FTT and announced they were going to do that, but that's a little bit different. Carl, good friend of mine from a long time ago, said if Binance collapses, we're all up a creek, we'll say. Carl's a friend of mine. That sounds like him. I don't understand why people are cheering for Binance to collapse. You realize if Binance goes down, everything else will crumble. Yes, Bitcoin will survive, but the entire crypto ecosystem, including stablecoins, will die. Yeah, that's a good point. Binance is way too powerful, and that's why I'm not here to trash Binance because I don't have anything to think about them. I don't have anything to say about Binance that is inherently negative. I can't say for sure, okay, but Binance has this problem. Binance has this problem. I have some concerns about their solvency, about their reserves. But the one thing I will say about Binance is that they're way too big. They're way too big. Way too big. We need Binance to be several different exchanges that are all independently operated and fungible on their own, not fungible, solvent on their own right. Binance right now, if something happens to Binance, Carl Wright, we're screwed. Like, you pull an FTX with Binance, Binance is at least 5 times bigger than FTX. It's almost an order of magnitude larger than FTX. In valuation, in reserves, in staff, in customers, in scrutiny, in regulatory questions. It is a very dangerous thing for Binance to be as large as it is. And I think Binance is a great exchange, and like everybody says, yeah, they're processing transactions wonderfully, and that's great. So long as they're the biggest exchange, they need to be held accountable to doing a good job. It is a dangerous spot to be in, though, without more regulation and without more clarity. We need to demand transparency in this industry. We need to expect it as a requirement for doing business with them. We need to be expecting as much transparency as possible. I understand there are reasons why companies don't want to give away all of their books. Sure, no publicly traded stock wants to either, but that's part of it. That needs to become industry standard. All right, we're going to read chat here for just a minute or two, and then we're going to go ahead and wrap out. Hey, Jebb, do you think cash is king right now? Yeah, cash is always king, as far as not the actual king, but as far as the monetary policy and how you handle your finances, cash is almost always going to be king. Dan's Ada says cash is obviously king right now. Yeah, stay liquid. Stay liquid. Get some investments, sure. But understand, the global economy is going to get worse over the next 3 years. You're going to see a drop in the housing market as a result of the buying pressure drying up because people can't afford to buy a house with a $1,000 more monthly mortgage payment than they could 8 months ago before rates started jumping. We're already seeing housing prices go down. We're already seeing a shrinking of a lot of sectors around the world. Not so much in the United States, but a lot of them around the world. customers have made Binance what it is. It's true. Binance is a very successful company, and more props to them. I got no problem with an entrepreneur going out and making a ton of money. We just need to make sure they have some competition. And right now, their only other competition is Coinbase. They had FTX. FTX clearly was a house of cards. That exchange was never going to survive. And I'd like to know whether or not Binance is in the same boat. I don't think they are. Seems to me that CZ is a better businessman than SBF. But 2 months ago, everybody thought Sam Bankman-Fried was the better businessman than CZ. So I don't want to go off of assumption or gut feeling. I want to go off of knowing what their corporate controls are like and having an audit of their corporate systems, which is what should have taken place with them and FTX 2 years ago. I'm starting to think we're all not going to make it. I'm not trying to be a naysayer. I really don't think that that there's going to be a nuclear war or the world's going to end. I'm not trying to go there. I'm just saying that there is going to be a difficult 8 years ahead for the shakeup of the market. So, guys, I am hoping that we're going to see a rally on Bitcoin, but realistically, the fact of the matter is the 50 basis point rate hike is a good thing. It's good that they're tapering it. I think that's helpful for the economy, but there is also a danger in that the world is changing, and in a way that Bitcoin's never seen. Bitcoin grew up, and this will be my final point before we wrap it out. Bitcoin grew up in a globalized society, international manufacturing. You could buy this camera that we're recording on. So Canon EOS R with a 28 to 70 millimeter f2.0 lens. It's a $5,000 camera. This camera has thousands of components in it coming from dozens of countries. You can't build this camera the way that you could 10 years ago in a globalized society. You can't do it. You might be able to do it in 3 years after manufacturing comes back to the United States and you can build all those chips and all of those subcomponents in the United States, but you can't do it anywhere else. Can't do it in Europe. Europe's going offline from an industrial standpoint, more or less. China's about to collapse in on itself. It's not going to happen tomorrow, but we're seeing the writing on the wall. You have never seen 3 million people get out on the streets and protest in China in history before, and you've also never seen the pandemic go as crazy as it's about to over there, and you also have not, in a very long time in Chinese history anyway, had the emperor, if you will, which Xi, let's call him what he is, basically the emperor of the Chinese empire right now. That's what we've called it in history. We'll call it that now. Nobody can get any information to him. There were blackouts that took place last year. It took him 5 months to find out they even happened. He didn't even know they took place. Hundreds of millions of people were without power for days. He had no idea because nobody can talk to him. China is in a lot of trouble, and when they go down, it is going to impact the rest of the world. All right, guys. It's going to be a very difficult decade. And actually, here, I want to read this. Zyoko Kryazov? Mate, you don't understand. Russia is the only country who can survive by itself and by its own resources, which are gigantic, from land, food, oil, gas, gold. What Russia needs from U.S. jeans and Apple. It's true. That's why Russia has survived as long as it has during this conflict under massive sanctions. It can feed itself and it can power itself. What it can't do is run a modern industrialized society, and what it also can't do is stop all of the different factions within Russia from tearing itself apart and descending into a revolution like it did 100 years ago. That's what Russia can't do. Russia can feed itself right now. Russia can power itself right now, until you shut down oil transports the world over, and then all of the oil freezes in the pipelines and the oil derricks freeze, and you have to rebuild the entire petrochemical industry in all of Russia in Siberia. That happened in 1992. Took 30 years to repair it. The repairs were finished this year. Anyway, appreciate all of you guys tuning in. If you did enjoy, make sure to go ahead and smash that like button. Let's see if we can get up to 500 likes. Make sure to stay tuned because tomorrow will be the last stream for a little while. We're going to be taking off next week, and the first 3 days of the week after we'll be back. I believe it'll be the 29th. Let me check that date for you. We will be back here 2 weeks from today on the 29th after Christmas. So Merry Chrysler, everybody. Merry Christmas. Again, we got one more stream before we wrap it out. But before I go for today, I do just first want to thank each and every single last one of you for watching, as always. And I will see you guys in the next video. Peace.